Welcome back to Power Trading Radio Live and your host, Merlin Rothfeld, with today's special guest.
Hello, everybody. Welcome back to Power Trading Radio. Merlin Rothfeld with you for your weekend edition of our show. Hope you all had a fantastic trading week out there. Every now and again, dynamics in the markets change. There seems to be a focus on one asset class versus another. Years ago, it was, the debacle going on with the euro and the European Union, and then it shifted over to the yen. Oh, my gosh, the yen. What's going on there? Quietly, the yen has disappeared into the sunset. Of course, it's doing amazing. The whole volatility area over there, the euro, nobody really cares anymore. Now, all of a sudden, it comes back to precious metals. And maybe even Gollum would look at this precious metal now and go, not my precious. It seems like it's falling out of favor with many different people. And my guest coming up here actually was on the record, had a report out and everything saying, look, gold is going down. It's going down. And it's interesting because he works for a rare coin wholesaling company, which you would think would always be perpetually bullish on metals. Not so. It's about market analysis and having a plan in place, regardless of what your business is and any commodity or instrument. My guest today is Paul Buzby. He's the Director of Economic Research over at Rare Coin Wholesalers. Paul, welcome back to the program.
Hey, Merlin, good to talk to you again.
Yeah, we don't have you in the studio with all those gold coins and rare coins. I was a little nervous last time, so hopefully, I know Laurel was giving me a hard time saying I looked really nervous, so I'm hoping I look okay today.
Yeah, well, let's put it this way. It was kind of fun to bring them in.
It was. I don't think I've ever actually held a $500,000 coin that, honestly, if I received that coin at like McDonald's after I got my Whopper, or Big Mac or something, I would probably go, oh, this is the wrong coin. Could you give me another one? This looks old. Little did I know it was worth $500,000. It was pretty nice. Thank you for bringing all those in.
It was a good show and tell. I agree.
It was. We got some commentary from listeners going, that little thing? Yeah, that little thing, surprisingly. Speaking of little things, you were up in Las Vegas, where there's always a big thing going on up there, and I had the privilege of meeting you and your team at a money show. I believe our first encounter was in San Francisco Money Show, which is obviously more towards the investment side of things. You just returned, and unfortunately, I wasn't there to be with you and have fun up in Las Vegas. Tell me a little bit about the money show up there. What happened?
Well, this year the Money Show in Vegas had the largest turnout they've had in years. So you have a lot of investors wondering what to do. And what was the general feeling that I got through everything is everyone is really concerned about, has the Federal Reserve decided to start shifting policy and tightening up, or are they still on this easy money trend? And that was probably the biggest discussion going on throughout the whole meetings. Even the first night when they had some of the big people there talking, Steve Forbes, that group, that was the main topic of the discussions, where things were going.
Well, it seems to me that it's not a question of if, it's just a question of when. There is no way the Fed can do this in perpetuity to keep purchasing like this. What was the general sense? I know I'm hearing mixed things. Some people say, well, it's going to stop by this summer. You have the San Francisco Fed chairman saying, look, we could stop as early as this summer, which is a real shock. Others saying, no, we're going to keep on going. What do you think?
Well, basically, the only thing on record, remember, what they say on the press releases really don't mean too much.
Right.
What they actually put in their minutes means everything. And the last minutes where they're actually on record of making some kind of change was the January minutes, when they said they were looking at ending Operation Twist and QE3 mid-2013. That's why next Wednesday is so important, because the minutes from this last meeting come out this Wednesday, and that's kind of unusual. Normally they release those minutes within 4 to 10 days. They're waiting almost 22 days before they release the minutes. That's kind of unusual.
Reading between the lines and being a conspiracy theorist, as I tend to be, does that tell you anything, this super delayed release?
I think they were just trying to give people some time after what they said. Basically, they said no change. If they say no change, it means go back to the last meeting, which means we're looking at ending Operation Twist and QE3 mid-2013. I think they were just giving the market some time to adjust to that before they actually put it out in their minutes, which we'll see, 12:15 Eastern Time, May 22nd, this coming Wednesday.
Right. He's got it down to the second. I'm curious from your perspective, and, my opinion of the Fed is not, I don't hold them in high esteem, high regard whatsoever. Yours may be different. What do you think the objective is here? It feels like that the forces that be are putting a tremendous amount of pressure on the Fed to obviously get our markets back up, get them running. We believe that it's to get create jobs and create more market stability. Or is it just to get our financial markets back up so the people that are pushing the Fed can make a ton of money on the rally?
Actually, your last statement has been true for the last 3 years, okay? But that's shifting.
Mm-hmm.
A better way to look at it is split our economy into two parts. You got about 30% of it's public, about 70% of it's private. The public sector, includes the government, includes publicly traded companies, which is most of your big banks, and that's about 30% of the U.S. GDP. I mean, just the federal, the state, the county, the cities, the stock market, and all the publicly traded companies and all the public unions. That's like 30% of our GDP. I mean, it's a huge chunk.
Right.
And you're right. All this easy money has been giving that group money. But the other 70% of the U.S. GDP, the private sector, they've had no money for the last 3 years. This is all about liquidity now. The Federal Reserve knows that the private sector needs liquidity. They need access to capital to invest.
Right.
And the only way that's going to happen is if the banks start lowering criteria. And that's not going to happen until the Fed starts raising the interest rate, starts tightening up on their policy.
Yeah, and that's kind of where I was leading with this. It almost seems the way these markets have gone, my gut feeling is the Fed's kind of secretly going, the equity markets are heating up here maybe a bit more than we thought. Things are looking good. Yet some of the fundamental economic data hasn't really turned that corner. It's been maybe leveling out in a slow increase. But, as we spike and rocket to all-time highs, I can't help but to think that the Fed at some point is going to use that as an excuse to step back a little bit. And I kind of think I agree with the guy from San Francisco that it could see some steps happen this summer.
Well, actually, this minutes is probably going to say nothing, which you'll probably see a little spike on dollar, a little drop on gold. You're seeing a little drop on gold this week. That's what everyone thinks is going to come out in those minutes. I don't think they're actually going to state any change in these minutes. It's probably just no change. But the next Fed meeting is June 18th. The next one after that is July 30th. And you're starting to hear not just me, but several people now stating they're looking them either cutting back on one of those two programs or ending one of those two programs on one of those two dates.
Yeah.
The thing is, the moment they start tightening, the regular banking system, looks at where the Fed's going to be. It's like the oil's future market. They look at where the Fed's going to be 6 to 9 months down the road, not today.
Yep.
And if they see the Fed start tightening now, the banks will start going to raising their interest rates where they think the Fed's going to be 6 to 9 months from now.
Refinance now, people. Refinance.
There you go.
Tell you what, let's take a quick break, Paul. When we come back, I want to talk about your newsletter last time. I forget how long ago that was, but you handed me a newsletter after you told me that you thought the gold was definitely headed for a tumble, and I was kind of in dismay because usually a gold coin person or somebody who's involved with precious metals is almost perpetually bullish on whatever it is that they're selling. In this case, you're actually bearish on it, and now you're kind of grinning ear to ear, I'm sure. So we'll talk about that when we come back, and well as your prognosis for what might be happening with gold going forward, and why rarities might actually be kind of a safer haven here because of their scarcity not being tied just to the precious metal values. We'll be right back after a short break with Paul Buzby, the Director of Economic Research at Rare Coin Wholesalers on PowerTradingRadio.com.
You've been listening to Power Trading Radio, live, fueled by Online Trading Academy. To learn more, visit us online at PowerTradingRadio.com.
Welcome back to Power Trading Radio, everyone. Merlin Rothfield with you for your weekend edition, and we're talking with Paul Buzby. He's the Director of Economic Research over at Rare Coin Wholesalers. Started off talking a little bit about the macro picture, kind of what's going on out there with the Fed, their decisions with quantitative easing. Obviously, that's something that's steering the markets, whether it's to the upside because of the easing itself or potentially causing this market correction because of a withdrawal from this easing and Operation Twist and all kinds of other devious little tactics that the Fed has devised. Several months ago, and Paul, I forget exactly how long ago it was. My guess was 6-9 months ago. We were at a trade show. Gosh, was it? Maybe it had been New York. It might have been New York about a year ago or so. And you were saying, yeah, I got this report out. It follows all these reasons why I believe that gold was going to sell off. And I was kind of shocked out there. I'm like, really? You're in the industry of selling precious metals and gold coins and rarities. I always assume that you're just going to be perpetually bullish on it. What were some of give me the timeline. When was your report that came out, and why was it so bearish? And then we'll work forward from there.
Actually, I wrote the initial report which I think you got the second version of it. The initial report actually came out December of 2011.
All right.
Okay, you got the second revision.
Well, thanks for thinking of me, buddy. Way to keep me late on the list.
Right. The third revision of it came out in our market volatility report just before the big drop from 1,500 down to 1,350. I have to revise it again now. So basically, the reason I came up with this, there is a time to buy gold and silver, but there's also a time to sell it. And we work with you need to work with your people long term to get them in it and out of it at the proper times. It is time to get them out of it. There'll be a time to get them back into it again, but not right now. Remember, do good business for your people. That's the main thing.
Right. Yeah. And what were some of the factors out there? I know that you had lots of justification and reasons for it, and I think at the time a lot of people would have said, "Oh, come on, this is gold. It's precious metals. It's rare. It's going to keep going up." Lo and behold, we've tanked. Of course, you're grinning. What were the criteria for that?
The big thing is if you're in an inflationary cycle, gold goes up on the dollar. If you're in a slight deflationary cycle, gold doesn't protect you against anything when you go into a deflationary cycle. Okay? The Fed did the quantitative easing, whether it was good or bad, it's what they did. And they gave a lot of money. They forced all the money into the stock market. They gave tons of liquidity to the federal government, the public unions, the banks, and they all did pretty well over the last 3.5 years. The rest of the private sector kind of got left out of the picture, and that's what got us to today. Actually, the change, and if you want to look at the bottoming, where history will portray the U.S. economy hit bottom, was the last week of October in 2011 on Wednesday at 4:55 when Ben Bernanke came out and said we're looking at ending Operation. We're going to be doing Operation Twist, and then he left. No one even knew what it was. I had to go back to 1961 the last time they did it. Everyone was expecting after QE2 that in that November they were going to come out with a QE3 like $1 trillion. Remember, gold went up to 1,900?
Yep.
And then within 3 weeks it dropped down to 1,588. That was the moment when I deciphered through everything that I knew gold had hit its top, and it's going to roller coaster downhill, and it's going to keep going. You know, a lot of people are saying 1,200, some people are saying 1,000. I'm going to be the total contrarian here, 600 to 800. Okay? Yeah, that far down. And it will have a little bounce back. You know, I think it'll actually get down to 6, but then bounce back up to 8 just because all those mines that aren't profitable at 600 will get closed down.
Right.
And the few mines that are left, demand will go up, so it'll push it back up to 800 again. Okay? So I'm seeing that far of a drop here. Over time, you know, it's going to take time to get down there. You know, it could be there in a couple months. It could be there in a half year. I don't know. Okay? But we're seeing that roller coaster downhill, and basically it's all time to when the Federal Reserve tightens policy, and they basically have said what they're going to do in January.
Right. And
now once they end completely Operation Twist and QE3, the U.S. isn't printing any money. We're stagnant. There are no more U.S. dollars in the world is it. Now, that would make it sound like, well, the dollar's not in a deflationary cycle, it's just in a stagnant cycle. That's not true. If the world GDP grows 1%, you need 1%, and the U.S. dollar is the world reserve currency. You need 1% more U.S. dollars in the world. So if they're not printing more and you need more, you actually enter a slight deflationary cycle, and that's what's going to drive the dollar up to king dollar, and that's what's going to collapse gold.
Yeah, and it's not just, you're obviously we're focusing on gold, but it has to do with a lot of natural resources here. What we'll do is we'll take a quick break. When we come back, I want to talk to Paul about this because we talked briefly about this on the last show where you have the dollar has been in a nice little uptrend here for the last few months. That stronger dollar puts pressure on commodities, and that could be for gold and silver as well as natural resources. So that's something where that trend may go, and we'll see if there's anything being done by the U.S. government to help with that pressure, that dollar moving to the upside. Then we'll also look at rarities. We look at gold here tanking. We'll bring up the chart after the commercial break where it's just looking awful. Of course, it is at a demand level. And what may be done from your personal perspective, from a portfolio perspective, to help hedge that and maybe stop some of the downside risk if you're in those areas. So we'll take a quick break. Don't forget to forecast what you think the spot price of gold will be by next week. And Power Blast your questions at powertradingradio.com.
This is Power Trading Radio Live. Real people, real money, real trades. Visit us online at powertradingradio.com.
Welcome back to Power Trading Radio, everyone. It is your weekend edition. My name is Merlin Rothfeld, and today I'm joined by Paul Buzby, who's the Director of Economic Research over at Rare Coin Wholesalers. You've seen him on the program a few times here. And, Paul, before we ended that last segment, I was kind of shifting towards the dollar, which obviously, as you mentioned, is the world's reserve currency for now. That may change in the future. Lately, we've seen that dollar index rise, and I'm going to have TJ bring it up here real quick as we kind of keep this discussion going. The dollar broke through some key levels today. To me, this is one of the major factors, as well as some of the others, that's really impacting commodities, precious metals. From your perspective, you seem to think that the U.S. is kind of slightly inflating the currency. Isn't this really kind of a reaction to the Fed's potentially quitting quantitative easing and pulling out of that whole arena?
Absolutely. And you want to know something? From people who are in commodities, yeah, they're going to take a hit.
Yep.
But from the economy overall, commodity prices going down, oil, lead, copper, tin, gold, silver, all these things, it actually brings down the cost of manufacturing, transportation, agriculture. Their costs go down, their profits go up, and then they have extra money to expand. So I like the idea of commodities going down.
Yeah, well, isn't it just kind of a return to a normal level? I mean, look, I'm going to bring up silver here on a weekly chart. If I can bring up, do I get it on a weekly chart? There you go. TJ will bring it up on a weekly chart for me. You know, it seems to me that if I just go back to, what do I got here on this chart? It's kind of hard for me to do this and talk at the same time. Sorry about that. It's multitasking. I can't, drink a soda and pat my head at the same time. But if I was to draw on a trend line going all the way back to 2006 and just kind of cut through what I see as the average of prices here, it seems really like in the middle of 2010 we just hit an anomaly period on things like silver, and now it's just returning back to its normal. No big deal. It's just the speculators.
No, and that's what's happening. We had fear of the instability of what we were going through drove everything up. Personally, as I said, I see gold going back down. I think the new normal on gold is going to be 600 to 800, and it's going to be there for a while because of the energy boom. And the new normal on silver is probably going to be somewhere between $14 and $18. That's a manufacturing support line for it.
Wow. All right. Well, we'll have to just wait and see what happens there. And again, you guys, what I'm hoping that the listeners get out of this is, look, this is just opinions from people who are in the industry, trading for a profession or doing analysis for a profession. So, don't take it verbatim. The gold.
I do not have a crystal ball. I just have my opinions based on a lot of information.
Right, and that's why we love having you on the show. I mean, when you said gold between 600 and 800, look, guys, it may never hit 800 ever again in the history of mankind. Of course, it could fall and never raise above 800. We just don't know. Bottom line is, whatever type of trader you are, whether you're a long-term investor, whether you're a short-term speculator, you got to have a plan in place. And if you're like Paul and believe that gold is going to continue on to the downside here, what you definitely need to do is not buy it. Maybe find places where it's a good shorting opportunity and look for that. Part of the problem I have, Paul, is the masses mentality. Right now, today was an interesting one. I have a barometer of herd mentality, and one of them is the University of Michigan Consumer Sentiment Report. I have always felt that as soon as we get over 75, it means that a majority of the people are overly zealous. They're probably buying into a market that's overly inflated. Lo and behold, today the University of Michigan Consumer Sentiment Report numbers came out at 83.7. That tells me that, look, only 17% of the people are pessimistic. The other 83% are very, very bullish. That's usually when things start to turn. That might have been the same thing that happened to gold back in 2011, and this is kind of what's fueling this market right now, is this herd mentality. What are your thoughts on it?
My experiences is over the last year and a half since gold started dropping, everyone just held. No one was buying, no one was selling. This is the individual, the smaller guy. We're not talking the big hedge fund guys and the guys who are trading day to day. This is the individual. They were just kind of holding, and they're beginning to starting to panic and get out. It's getting past their uncomfortable level, especially people who got in at 1600, and now it's sitting at 1360. Okay, they're really getting scared because now they're in the red.
Yeah. Well, I tell you what, guys, if it breaks this little line here, TJ, I bring this chart up. For me, if it breaks down below, and I just have GLD, I don't have the spot price of gold up here, but we've got a little area of demand that goes all the way back into the beginning of 2011. If we break down below this 127 mark, you got a long way to go to the downside. And I know a lot of people are holding their gold right now thinking we've got a double bottom from the lows we established on the 19th, just a few weeks ago. But, the trend is your friend, folks. And what's the trend doing? Series of lower highs, series of lower lows. Gold not looking so pretty going forward. Now, one of the things I find interesting, and I loved when you were on the show last time with us, starting off with precious metals and just looking at actual gold coins like American Eagles, et cetera. And then you had the rarities. To what extent, obviously we see gold taking a big hit now. It was up around 1900. Now you're seeing it down in the 1300 range. I'm sure that a gold coin versus a rare gold coin, there's been a much greater preservation of capital with some of these rarities. To what extent do you see the value maintained? I know it's very subjective because it's rarity, so it's kind of hard to put a value on them. But I would assume that they're actually holding up fairly well. Actually,
they're not even really affected by the precious metals market. They're really separate from that. Give you an example. You got a 1907 high relief $20 MS65 St. Gaudens. That coin it's got 1 ounce. It weighs 1 ounce, has about 0.9 ounces of gold in it. It's probably got about $1,300 worth of gold in it. I think that coin's somewhere around 48,000. If gold drops down to 6,800. Do you think it's really going to affect the price of a $48,000 coin? No. The gold, the silver that's in the coin is basically meaningless. It is 100% the rarity of the coin.
And, are you seeing an increase in that area? Because I know you do a lot with rare coins, in all aspects. I would assume that there is got to be an increase of people wanting to be involved in that arena.
Absolutely. During bad times, people get into rarities for wealth preservation. It's just a place to tuck money during all the volatility. Sure. Okay, and so we actually do pretty good during bad times. During good times, though, 70% of the people who buy rarities are pretty wealthy people, and these people have even more money, so they buy even more. All right, so we're actually definitely seeing an uptick. And the thing is, one of the big things we got is a lot of people have gold, and they're looking at getting out. They're looking at what do you want to do, and they actually trade their gold in to get into rarities. Yeah. So because a lot of people are getting rid of their gold, we're also seeing a lot of trade-ins so they could take advantage of it. But basically, the rare coin industry is healthy. It's seeing an increase. Coin sales are going up. When everything collapsed 4 years ago, the rare coin market basically went, sales volume dropped for a couple months. Sale prices didn't move too much. And then the sales volume just picked up. And the only reason it slowed down is everyone didn't know what to do. Everyone was panicking 4 years ago. All right? But besides that, it's just been trending up since. Rare coins do about 12 to 16% annually.
Well, and for those of you who are into rarities, we got Bob Dunn downstairs as a car collector, and he can tell you the cost of a 1967 Chevelle SS, which is what my dream car is, doesn't seem to be dropping much either. It's not about the car. It's about the rarity and scarcity of these things. If you'd like to know more about precious metals, go to Rare Coin Wholesalers. TJ, bring up this. He's one step ahead of me today. Paul, I'm at your website. I know your report comes out, and I know you like to update that one. I'm sure a lot of our listeners would love to read it. Where would they be able to find your updates here about market analysis?
Okay, if they go to our website, www.rcw1.com, basically when they can go to either the financial website or the coin website, depending if you're an investor or you're a collector. Once you're on the website, you just go to the the
resources?
The resources the media page. Mm-hmm. And there it lists a whole bunch of our articles we've written, and the one they're looking for is the market volatility. All they have to do is log in. It's free. They can download it. Basically, it covers everything that's going on about the Federal Reserve, about the gold market, about the dollar. I even go in a little into some of the other where you're going to see some effects out there from the energy industry. So it's pretty big.
Absolutely. Well, if you guys want some insight into these markets and get some ideas about metals, precious metals, and economic overview, Paul does a great job with his releases. You can get it at rarecoinwholesalers.com. Paul, thank you so much for taking the time on this Friday afternoon to be on the program. If it was a little bit later, I'd probably drive down there and have a nice frosty beverage with you, but we'll have to hold off on that one.
No, it's always good to talk to you, Merlin. Look forward to the next time.
Sounds good. Take care, Paul. All right, that was Paul Buzby, Director of Economic Research over at Rare Coin Wholesalers, giving some insight into where he thinks gold is going. Surprisingly to many of the viewers out there right now, you're thinking, you've got to be kidding me. Gold at 600 to 800? Look, total possibility. And I'm hearing a lot of very prominent people think that gold is headed for a nice big downturn, and he's definitely entrenched in that industry. If you'd like to know more, check out Rare Coin Wholesalers. We'll be right back after a short break with all your economic announcements for Monday's trading session. And that's pretty much it. We'll be right back after a short break.
Power Trading Radio Live is back with a look at what lies ahead for the next trading day and today's Power Pick.
Welcome back to Power Trading Radio, everyone. Merlin Rothfeld wrapping up your weekend edition. Hope you all enjoyed that session with Paul Buzby of Rare Coin Wholesalers, giving some insights into global market perspectives, economics, the wonderful actions of the Fed, and very importantly, precious metals and rare coins over at Rare Coin Wholesalers. If you'd like to know more information, you can visit their site at rarecoinwholesalers.com. Let's take a look at Monday's trading session. For the beginning part of next week, it's going to be real quiet with regards to economic announcements as well as earnings, but we'll give it a shot anyway. If you take a peek at our calendar, wait a minute, there's nothing for the U.S.? Nah, there's really nothing cooking for the U.S. May 20th has got zippity-doo-dah and zippity-a. We'll look at the Australian dollar with the CB leading index and their monetary policy minutes. That's the major stuff going on in the world, guys. Strange, but true. New Zealand dollar has their inflation expectations, which isn't a major announcement. Hey, but somebody might be trading the Kiwi out there. Maybe it's the earnings front. Not so much. Look what we got here. We got Campbell's Soup. Soup is good food. We'll see if earnings makes for good food. We'll see if Urban Outfitters can top Abercrombie & Fitch because, hey, Urban Outfitters, look, you can be anybody and get clothes at that store. And TiVo coming out with earnings after hours as well. Does TiVo even do anything anymore? I thought my every DVR had built-in recording features, but maybe it's just me. All right, enough of my opinions. We'll talk about, actually, my opinions are really good when it comes to this guy. Derek Zellick will be on the program. I had the privilege of working with this guy in the past. I'm actually training him from an instructor's perspective. He'll be joining us as he's teaching a class out in Irvine, California. He'll be in set with us. If you have questions regarding the equity markets, give us a Power Blast. Power Blast out at powertradingradio.com. We'll get all those questions ready for Monday's show with Derek Zellick. Any other questions, we'll hold for that special guest during next week's shows on Power Trading Radio. We'll see you guys next week. Don't forget you have until midnight on Friday to forecast your gold price and get a free gold coin on behalf of powertradingradio.com. See you next week.